NFTs, they're everywhere right now. They even made it on Saturday Night Live this past week. Now that tells you how mainstream it's gone. Sort of like when my mom was talking about GameStop stock this January. She's not a gamer and she's not an investor, but she still knew all about it. And since I know many of you watch this channel because you're always looking for the next big thing to invest in, and typically that's been IPOs or SPACs, I thought since this really become the big topic of the day, it's something I'm going to talk a little bit about and just give you an idea of what NFTs are and what they're not, and why investors seem to be flocking to them. And I'll share some of my own personal thoughts on them, including who they might be best for. And if you feel that they are something for you to invest in, then I'll give you an idea of how you can go about buying into them. So before we get into the investment side of this, I want to start off like I always do with any new investment. And again, that's typically been companies, but just give you a little bit of background what that investment's about. So when we hear the acronym NFT, it actually stands for Non-fungible token, which is a unit of data stored on a blockchain or digital ledger which can represent a unique digital item. Now when it comes to NFTs, that blockchain is Ethereum, which is an open source decentralized software platform, and it's used for its own cryptocurrency, which we call Ether. Now back in 2018, there were 4 Ethereum developers that authored the ERC-721 token standard, which we really call as the non-fungible tokens or the NFT. Now as far as the word non-fungible, it sort of sounds like a little bit of a nasty word to me, but it more or less means that it's unique and that it can't be replaced with something else. So for example, if you have $1 and I have $1, they're pretty much equal, so those would be a fungible types of item. Even a Bitcoin is fungible if you trade one for another. Your Bitcoin equals mine. And you basically have the same thing. Now when we go into the word non-fungible, again, we're talking about something that is unique. And really with NFTs, we're talking about digital art. And to take a step back from the digital world, just think about something world famous like the Mona Lisa painting. There's only one that exists. Now that doesn't mean that there's not copies of it out there, but the actual one, there's only one, and you can't trade it for something else because they're not the same types of items. And because something like the Mona Lisa is unique, you can't easily replace it with something else. So again, it's not like the dollar bills where I have one and you have one. You don't have a Mona Lisa to pay for my Mona Lisa. So again, we can't do an even trade. Now in the history of the art, there's always been a lot of forgeries and fakes and whatnot going on. So as an artist, particularly for digital artists, this is really considered to be a good thing, because if you have a digital art, whether it's a song, which we know can get downloaded and shared over and over and over again, or a picture, anything digital, it can make its way all around the world, but you don't have a way to show ownership of it, and you're not making any money from it. And because of this constant ability to be reproduced over and over and over again, it sort of creates the perception that it's everywhere, and that leaves it with no value. So enter the NFT, which then you have a way to show that piece of art that you created. You have ownership of it and you can sell it. And then again, because there's only one of them, can show that scarcity. And again, when there's scarcity of a product, that makes it more valuable. So up until now, most NFTs were minted as an ERC-721 token, which initially meant that when an artist sold their work to a buyer, that would really be the only time that they received money for the sale. And then if the buyer were then to resell it on the secondary market for 100 times more the price that they paid for it, the original artist wouldn't see any of that. But that's sort of evolving now, as an NFT can be designed to give the artist a 10% royalty, or whatever the number of percentage of royalty they want to have when the NFT changes hands. So then every time that art is sold and resold, the creator or the artist could then get back that original 10% royalty. And then the NFT has the author's signature and proof of sale built into the code, so there's really no way to fake or forge or replicate the artwork. So that's a little bit of background on NFTs, and again, particularly you can see the value if you were an artist. Again, having that ability to get paid for your work because, again, you are able to sell the unique quality of it. So now from an investing perspective, let's think about what an NFT is and what it's not. So really what the NFT's purpose is, it's designed to give you something that can't be copied. It gives you or shows you that you have ownership of the piece of art or the work, even though typically the artist can still retain the copyright and reproduction rights. So to put it back into terms of that Mona Lisa example, anyone can buy a print of it, but only one person can actually own the original. So the other thing is that as the buyer of the NFT or the investor of the NFT, you don't gain exclusive access to the work. And you don't really possess the actual original digital file because, again, we're talking about digital artwork here. So, for example, for the person that bought Jack Dorsey's first tweet, which went for like $2.9 million, they can't hold it hostage. Any one of us can still go onto Twitter and see it. So it's not like that the person that bought it can keep it away from everybody else, but they do have that proof of ownership. And again, if there's a value in that, that's what it's valued for. It's not because they can take the tweet and do whatever they want with it. Now, for the benefits of the NFT as an investor, again, you feel pretty confident that if you bought it, it can't be forged. Every transaction on that item, is tracked on the digital ledger. But as far as to a concern of actually the NFT itself, there is still not a 100% way to prove that the person that uploaded the artwork actually was the original artist. So there still is some potential for where art was used for NFTs without that creator's permission. Now on this channel, we've talked a lot about investing in stocks, where those are generally based on fundamentals. Instead, really what the NFT is worth is what people are willing to pay for it. So whatever the popularity or the take on investing in NFTs are. So when you buy shares in a company, for example, you actually own a piece of the company. And if that company makes money, parts of that money, again, percentage of what you own by your shares, you actually own part of those profits. So you're basically making money from the fundamentals. Now with art, there are no fundamentals that really set the price of anything. It's just really what people are willing to pay for it, and that can change over time. So for instance, if you think about baseball cards, which years ago, they weren't necessarily meant to be collectibles, back way early on, and because of that, very few were saved. But because there were just so few saved, then that meant that there was very few of them. And because that was basically a scarce item, then people were willing to pay for it because there was only so many out there. So what happened was with trading cards is once people saw that, wow, this card is worth thousands of dollars, they started saying, I'm going to go buy more baseball cards and start saving them, meant to be collectible. Well, what happened was that more people were saving them, so then those cards weren't as scarce and therefore not really worth anything. And we've seen that with other things, toys. I grew up in the 80s, so I've seen that a lot with like Cabbage Patch Kids and whatnot. People would buy stuff and then not basically buy it to be collectible. And the first thing you would see on there is, it's a collectible. And so people bought it and kept it and never even used it. But again, thousands are out there, so they're not worth anything. So going back to sports cards, what was obviously happening was people were buying these cards. They really weren't worth anything because, again, there were thousands of them out there. So when you think about what the industry did, what they started to do was they started limiting how many cards they made. They had special lines of cards, and so that was their way of creating scarcity. So it was more like instead of buying a card and that was easily acceptable and just keeping it over time and very few remained, what they did was they created so few that it was almost like you had a lottery ticket if you got one. So NFTs can work like any other speculative asset where you buy it and you hope that the value of it goes up one day so you can sell it for a profit. And what we've seen is that when people buy things for the sake of it being a collectible, it doesn't always hold its valuable. It's really when it wasn't expected to be valuable, so there's very few, that's when it becomes more valuable. And again, what the NFT is trying to do is saying, there's only one true real or original digital image or artwork, and so you get to own that. So right now you're hearing these crazy numbers of what some of these NFTs are going for, like into the millions of dollars. And I think what could happen is with more NFTs out there, that could result in more supply for people to choose what to invest in. And again, that could always be a little bit fickle because, right now having the first tweet of Jack Dorsey might be valuable, but then other tweets could become more available. And so you might have people holding out for certain tweets and not willing to waste money or what they feel is wasted money on the tweet that they don't really want. So when I think about NFTs, and again, I'm speaking for myself here, they're a little speculative. And it's probably too speculative for me at this point. And there's a couple reasons for that. Number one is it's going to be very volatile for now, just because it's newer. We've seen that with crypto over the past 10 years or so, where it goes through these cycles of it booms and then it crashes and booms and crashes. And again, where you have the stock market that's been around for years, or the bonds, been around for years. So we see a little bit of a history of what tends to happen. But I think the biggest issue I have with these NFTs is that you're basically creating a scarcity where there really isn't any. So thinking back to Jack Dorsey's tweet, if I were the one that actually bought it, yes, I could say I own it, and there's some cool thing to do that. But at the end of the day, it's not like I'm keeping it from anybody else to see it, and I'm not be able to charge to say, if you want to see that tweet, you got to pay me to see it at this point. So to me, I'm just not sure I see the connection of when it comes to as an investment. While it, again, really cool to own, and if I was a Jack Dorsey fan, I might be interested in it. Maybe not $2.9 million, but you get my point. And again, just when you think about other things like diamonds, for instance, they're considered to be rare. That's the way they're marketed, but really that's more of a perception. Because again, you have basically an industry that limits how much diamonds go out there. So they make it seem rare, and so you buy a lot. You pay a lot for one, but then try to go back to a jeweler and try to resell it. You're not going to get the value out of it because, again, they control how many come in, and there's really a lot more there than you realize. Now, I would never tell anybody not to invest in NFTs because for all I know, they could be, again, the next big thing, and I would not ever want to keep you from that. However, what I would say is for right now, I would maybe keep it on the low percentage of the portfolio because, again, it's going to be volatile as it starts to find what things like this are going to be worth, and you just don't know. And so do you want to put 50% of your assets into NFTs? I may not want to do that. It could pay off big, but for me, it's more of a gamble. Now, I will say that there's a situation where owning an NFT could make sense, but it's not truly or just specifically as an investment, although it could definitely be that way. And that's if the NFT that you're investing in is something that you're already interested in. It's like a hobby or an area you know a lot about, so you're basically an expert in. So when you're an expert on something or you just really enjoy something, you're going to win by owning the NFT because either one, you just enjoy having it, or two, it's because you know the ins and outs of what that item is and what it could really be worth. So I guess my thinking is if I was a coin collector, I would invest in coins because I, number one, I enjoy it, but number two, I really understand what's considered more rare and, again, therefore more expensive. If I was just to go and say I'm going to invest in coins because I think they might be worth something and I don't know anything about them, it's probably something where I'm going to lose money in the long run. And so I better enjoy it an awful lot. Now, if you get to the point where you're learning more about NFTs, not just from this video, but from any other resources out there, and you decide that they are something that you're interested in, but you're not really sure where you want to start, I'm going to give you some quick basic steps here. But again, if there's a lot of you that are interested in the NFTs, definitely let me know in the comments. I'm always open to do specific videos where a lot of you guys are interested in. So the first thing you have to do would be to go to an NFT marketplace, and you have to open an account there. One of the big ones would be OpenSea, and again, it's one that operates on Ethereum. And what you have to do as you open your account, you have to fund it. So again, because most NFTs are Ethereum-based tokens, many marketplaces for those collectibles will accept Ether as that payment, because again, as we know, Ether is the cryptocurrency of Ethereum. Now, if you already have an account with a cryptocurrency exchange, you can purchase Ethereum on it and then send your crypto to the marketplace account. But if you don't have a crypto exchange account, and I know a lot of you guys are into crypto, so probably many of you do, but in places like Coinbase, which we know we've been talking about Coinbase because we are expecting a direct listing sooner than later, and also like eToro, those are some places where you could buy your crypto. And then you fund your account, and then once your account is funded, you can then buy your NFT on the marketplace. And typically the marketplace is set up a lot as an auction format. So then you'll find the item you want to buy, you'll submit a bid, and like most of these things, the highest bid's going to win. And then you'll own your NFT. So really the hardest part to get started in NFTs is really just finding the marketplace. And then if you're not in crypto yet, having to get some Ether. So then you can bid and buy your items with the crypto in your account. So anyways, I sort of just made this video is because I've been hearing so much about it, and there's probably 1,000 other videos out there. Again, I'm always looking at other YouTube videos, but let me know if you guys are interested in NFTs and if you'd like to hear more about them. A lot of things that I do videos on are things that I'm still learning more about. I'm always learning, and so I like to, as I'm learning and you guys are interested, I'll take you along for the ride. So with that, please like the video if you enjoyed it. Again, it really helps me know that these are the videos you like. and it helps me on YouTube, so I definitely need that. Share the video. Again, the more exposure we can get out there, the more we can grow as a channel and as a community. And if this is the first time here on the channel for you, I hope you consider subscribing. First of all, it's totally free, but we talk a lot of things, investing, whether it's those new companies, those IPOs or SPACs or direct listings. And again, I'm always open to talk about new topics that are of interest to the community. And then we also talk about some things like, HSAs or health savings accounts, how to lower your taxes, personal finance things too as well. So if you're interested in any of those, definitely consider subscribing. We'd love to have you join the community. All right, guys, so for now, I just want to say thank you for watching. And until next time, have a great day.